All right, here we go. We're looking at 4 minutes to go until market close, daily close, and we just had this massive ass retracement. Okay, this is what I'm looking at. Let me mark down these dates. These are what I'm looking at in terms of what happened today. All right, so let's get over and I'll write this down. This is the U.S. shutdown. That was October 1st. Okay. And it's happened to be 10 days on average throughout history. It was 10 days on average that government shutdown lasts. Of course, there was longer ones and shorter ones, right? But on average, it's 10 days. Okay. And 10 days just so happened to be today, you know? And that just so happens to be today, right here, at this point. So is that a coincidence? Okay. Is that a coincidence that it could end tomorrow? Right? With this, I'm putting it on the 11th so I can see it better. But that's where we are at today on the 10th, and we had this reaction. Okay, so what I'm getting to is that there is some coincidence here, and of course, it's possible there could be some sort of psyop, all right? And I'm just gonna go over the last one that we had, the confluence of it. Happened to be right at the bottom of this bear market in 2018, from the 2017 high. Okay, and let me draw you the range that I drew here. Let me give you the range I drew. The reason why I gave you a box here is because it's a range, all right? And this was the range from the high to the low on the daily chart. So this is where the government shutdown started. February 20 is actually 22nd. No, December 22nd. So I'm gonna need to move it over one step. Okay, so let's see, daily time frame. Yep. So it's December 22nd, 2018 was when it started. And we have this range. I'm just gonna get it from the wick. All right. And I'm gonna get it from the lows. From this, I'll go to the low of, so it went to January 25th, so it's gonna be until, it's gonna have to go claim this wick too. Okay, so this is the range, and to measure the price of how Bitcoin ranged at, Bitcoin ranged at a price that dropped about 19 to 20% on the daily time frame, and it's just trended down. All right, it did recover. So what do we have similar to this? Is that this happened at the low of the bear market. And if you actually look at the trend here, it actually started trending up the day that it actually, here, let's get the trend line. This started trending up on the day it tested the low of this, right? And then it started to trend up after the end of it, okay? So you could put it like this too if you really want, right? You could put it like that too if you really want, because it started trending up after this. But we're not going to do this fake to the downside, right? Or swing failure. We're not going to look at that. I would prefer to just look at it like this: that the lows come in from this government shutdown news, and you can easily speculate or even have a narrative of saying that this, um, let's see, U.S. Gov shutdown 2018. Okay. This, I don't really trust all this stuff. I'm just going off of the confluence of the data. Okay. But this is something good to digest, is that you have this descending like triangle or wedge, right? Descending like wedge that is right here that you can go off of. And I'm going to also use this pattern above too. Okay. So we'll go over that once I get back up there. It doesn't matter. What matters the most is that this lasted about what, 35 days, I think it was, from the from this let's see, from the beginning of it to the end, and then I'll get straight to the point. Yeah, so to January 25th, right? And this happens to happen on the bottom. The thing to worry about at this point is that this can either happen at the top. Now that it's it's like a mirror. Okay, so since it's like a mirror, this could happen at the top, because if you could see, it's in a position to where it's starting to trend on its way down. If that's the case, how this can go down is not going to be easy, like how it came up. Okay, this happened to take a longer period of getting down there. Okay, I mean getting up there. We could have the same kind of retracement that follows this, not to the upside, but to the downside. All right. So this could be like it's like one, two, three, one, two, three, four waves down, and it's usually like um, a swing failure to the downside. Okay, that would happen to go. So if this is going to climb much higher, we just need to really focus on what's really going to happen here on the downside, right? And I'm looking at this downsider here to retrace. These patterns that I see that climb up like a stairway like this, that's like very slow, and it takes a lot of time, that has a lot of divergences that just keep continuing in this fashion, like this and this and this. They have the tendency with a high, very high probability that when it does retrace, it clears it all right, like especially if it does something like this. Okay, like I've seen this plenty of times, and I'm sure the ones out there that would agree with me about this, they do happen quite often, right? That it goes to a certain point like this. Okay, so from the beginning to the beginning of the yeah, beginning of the breakout. So it would be around this area. That this thing would usually retrace back to the middle range. Okay, and that would be around this area. If you look at my other videos, I go over this, and I was doing this, over on all those other videos, and I did it also on live too. Okay, I also did a live. I got like 8 hours of content on that. If you really want to see how I was doing on the 1 minute time frame, there's reasoning on that video. You'll find out why I was doing on 1 minute time frame, and it's going to explain a lot. But this is exactly what I'm talking about, to where it comes back to the middle of these ranges, and as you can see, it holds like that, and it continues after it has a correction or accumulation phase. Okay, and look, like my main strategy is, it's really simple. 666 is the white. 333 is this the blue. Do you have to use the 333? You don't. Okay. The important thing about the 333 that you might want to just use is just to know when it's going to cross. Like whenever it crosses, that's what you want to pay attention to, because that's the beginning of the end. Okay. Let's put it to test. Look at that. I'm not making this up. Okay, because you happen to have the cross that happened right after the government shutdown ended. All right. So can we use the same confluence here? Okay, it goes the opposite way too. The cross happens here is the beginning of the end of the bear market. It's the beginning of the end of the bear market. Beginning of the end of the bear market. Okay, beginning of the end of the bull market. Same way you can look at it when it's crossing back up. Beginning the end of the bull market, meaning that this is going to continue to the upside, and then at some point it's going to end up at the tops, of course, right? So that's what I'm saying. That's your signals, and this is simple. This is really simple. I'll try to keep this video short. I don't really need to have 2 hour videos. I'm not looking at that, but there's just a lot of stuff to cover. So I am working on that to shorten the videos. All right, so here are the lows for 2022. We'll go over that shortly with the crosses here, but this is the beginning of the end for the bull market. Okay, on this date, November 22nd, 2023, beginning the end of it. Obviously, you had this double formation here. This is technically, in my experience, this is more of an area to where this is where the divergence is, just like this. Okay, so this right here would be this divergence. And when you get this divergence, whenever you see these divergences like this, these are the dragon's eye that I like to look at. These tend to fail. When they fail, they fail extremely hard to the opposite, and they retrace a lot. Okay, but when these break out to the upside, they also do a massive ass breakout. Okay, so I'm not looking at this thing to actually continue up or down just yet. We already getting the clear trend, but I want to get over the go over the government shutdown confluence first, okay? And it's holding up to today. So I'm going off of the average. So I'm gonna say about 10 days. So what I'm getting to is that the government could start up any time now. And if it doesn't, then we can stretch it out. But even if it doesn't, ultimately, I'm gonna look for this to cross if we do go down. This does not mean bear market. This means correction to the downside, and we just got to get targets ready. All right. So I'm gonna give you the targets right now. We're gonna go look at the targets. What I'm looking for here is this. I'm gonna do my Fibonacci retracement, and I'm not looking for targets of candles. I'm looking for targets of moving average. Okay. So I'm using Fibonacci to measure the moving average range, not candle range. Why am I doing this? Because this is where you can find the actual range of the average. All right. It's more important to get the average range because if you get the average range, you get the actual turnaround of the movement of the actual price action of the macro trend. All right. And of course, when you get the moving average to a certain point, it will be already extended away from that moving average. The further away it is from the moving average, if you're on the right side of the trade, the bigger your win. Okay. And it's safer. Okay. I'll say it's safer as in risk. Okay, it's more risk. Like you get more risk protection. In other words, okay, more you can be more assured. So here we are. We're looking at this. These moving averages already broke out into price discovery. Why am I saying that? Here, look at this. These are way above these moving averages already. It's already broken out into price discovery. That is why the divergence that happened here, you had this bounce off of this retracement, this 702 retracement. Continuation of this is just going to the upside here. I'm going to count from this wave the same way this scene of the crime that happened here, because technically, in my experience, these things are all fractals and they just repeat each other. Wave one, wave two, wave three should be a higher high. Wave one, wave two, wave three, higher high. This is why I shorted altcoins for me. Also, when you're above the 666, just like as simple as I say in all my videos, when it's above the 666 like this, you are in distribution. When it's above the 3 to 3 like this, you are holding this divergence. It's not letting it get below this. Why? It's building up its trend. Why is it building up its trend? Because it's trying to get to the highest point possible. Just like how it came down in 2017, down to 2018, and they got to the lowest point possible. Something happened here to prevent the price from going higher and higher and higher. It's called distribution. Okay? To be able to go into an accumulation below this, because this is where the big guys want to grab things, pick shit up, right? Pick the real stuff up, is right here. They're not looking at it getting underneath this 333. It's here. And without making it look like this, or even a bear market to lose any sort of trust, okay, that's my experience, right? Is this. It's obviously in a trending market. This is why people are still buying, people are still participating, people are still trading. This is why you're still here, because this looks promising. It's uptrend. It looks promising. It's always been bouncing. You've now been conditioned and groomed into belief that this is real. Okay? Every single one of these bounces are here. They had a higher high, and it continued. At some point, it's going to end. And I'm not saying it's going to end right now. I'm saying that it's kind of conditioned right now to be looking at it in a way that it's got a probability of it ending at this point because it's got a government shutdown. And the other time it got a government shutdown was at the actual low. Could this time be the high? Why am I saying that? Because 2020 might just be, and this is where it gets scary, okay? 2020 might just be the divergence of the bubble. If you're following me, let me draw it out. I'm gonna have to shrink this just a little bit more, 3-day time frame, so that we can see it better. Remember what I said about our divergence staying above these moving averages. Here we are. Okay. This, what if this was the divergence to continue up? Okay. Same thing like what if this was the divergence to continue up? And now we're here. And this right here is the end, and this right here is the divergence. All right. So I'm going over just that part, and I'm not saying it is. I'm saying that if fractals expand and they get bigger and they get wider and they're repeating the same thing, except now it's happening in a larger time frame, then that's just my theory. You don't have to believe it. The reason why I believe it and I can come up with this theory is because I've seen it so many times. Okay? That's over 7 years of looking at this shit for like 18 plus hours a day. All right? Sometimes not even sleeping. That's just insane madness. I'm not going to go over that. We don't need to know about that. It's just the fact that I'm just going over the I'm just giving you the straight up facts of how crazy I am with this shit, okay? Not crazy good, just how much time I have committed to it. Maybe the ones who can see these things too, they you'll get what I'm talking about. Okay? So here we are. I'm talking about the divergence like this. So this right here could be the bear market that we saw in 2022. Okay? So what if that was the 2022 one? We retrace back up. We did already. All right? So could that be? Could that be it? All right? And if that is it, then we are in a bit of a trouble because what does the retracement look like? What does the retracement look like? It looks like this. Coming back all the way, if we lose this level, the 49,000 level, if we lose that level, I would look at this thing to go all the way down and actually grab this level right here. 236. At the 236. I would actually look at it, go and grab that level. Why am I saying that? The 236? Because there's also confluence here that I also like to use these moving averages here where it crosses. Okay. I'd like to call this how the price action of the candles, they like to come back to the scene of the crime. And I'll give you more evidence of this. All right. I do this on the 1 minute. I did this on the 1 minute time frame in the 8 hour video. And it shows you quite a bit. All right. So here, there's your confluence of the cross. Price action comes back. Let me get rid of this Fibonacci first so we can see it better. Comes back to the crosses of these grids, okay? Of these grids. It likes to come back and claim these levels because that's where the presence of something happened here to cause this to go. If retracements happened, then that means when retracements happens, then that means that there is going to be some sort of inflow of enough liquidity coming back in or enough trading to come back in to bring sentiment or volume or money, whatever you want to call it, just call it enough energy to bring this average back up. Because whatever is doing it is coming back just like how you would sell high and buy low. So if we don't even pay attention, let me do it like this. This is another form where you can try to do it, but I don't recommend it unless you know what you're doing. Don't even look at candles. Look at the cross. Continuation of it. We are in price discovery for these moving averages. We have broken out already. What does that mean? And we have diverged. How do I know what the divergence of the candles? You have a pump here and then a slow, steady calm to get to even back out. You don't really see it that well here, but it does happen here. And when you see the divergences, this is when it starts to end. Let me show you. Here's your ending of it. I'm doing it without looking. All right. Here's your divergence. You see this curve bend? It's a shift in the air. Okay. This is where my animal nose instincts would tell me something changed. Right here. I'll keep this line as a red line to show me, to show as an alarm. Here's your alarm. Something shifted here. Okay? Something went up. Okay? Or something moved. Here, something diverged. Right here. Where it came up and then just stopped, right? Volume stopped. So I'll put it right here where it changed. And then we'll see when we put the candles back, right? So let's look. So this is the divergence where it bounced off of this again to continue. The divergences like that do this, the fake out to the downside to come back up and flip to support happened right here. Did I need candles for that? Absolutely not. And that's why I would prefer to go off of an average than the candles. You can choose whatever it is you do, but you know, I like my win rate with this, and it's, to me, it works for me. And this tells me the trend overall. You don't need to follow exactly like the way it is, but it's working. And I'll tell you that it's got a high win rate. All right. So here's the deal. When it does come back to this level, which it does, all right, here, let's back test this history. You go look at my other videos, this is already all back tested. Let me put it in the crosses exactly to the crosses. All right. This is why you don't. This is why you could use the 333, but it's not necessary because sometimes it does cause a lot of noise. All right. So you have to understand that the more important one here is the 666, the white. All right. Look at all the trading activity that happened right here. Look at all the profile volume that is being traded here in this profile of trading activity that happened right between these two lines. Okay, but in this bottom line here, the first cross, this happened here. What did the price do? Magnetize its way back up into it, and then it dragged the price action, none of the moving average back up along all the way as it traded in a range to stay above this 666. It dragged this back up. Now you got a second cross. As soon as you got the second cross, what does this look like? It looks like the same exact price reaction that you get with this government shutdown before you run. And it just so happened that this happened to be the time of, right there, of this, March 20th, 2020. Correction, correction, run, run. This is what I'm saying. It's not anything for you to call crystal ball. This is just history showing you exactly what it does all the time. Goes higher. Okay? But these are divergences, and this is what you need to be worried about when it comes down to divergences, is that when they do show themselves like this, it's technically the beginning of the end of a certain move. Just like this. This move here was the beginning of the end of the bull market. It started, so it's the beginning of the end when it ends. Okay? If you want to know how this ends, when exactly it is, I know when it does. I know exactly when this is one going to end too, but I'm not going to go over that one in this video. If you keep following me, maybe you'll figure it out with me, and I'll tell you, right? But at this point, I'm going over this. I'm going over the fact that these moving averages, they do show a lot, all right? And this is the simplest thing. It's just two lines. It'll print you money, all right? Today, my close on Solana was 250% on the short. Could I have held it longer? No. Could I have held? I mean, yes, I could have held it longer. Could I do whatever? No. I waited 5 days for that short to play out pretty good. But like technically, do I need to like be concerned about it? I'm just here to tell you the main thing that I was using as an indicator to even take that short. Okay? I'm not going to go over Solana, but I'm going over the fact that I could have shorted Bitcoin too, but there was no reason to short Bitcoin when Bitcoin was my indicator. Bitcoin goes down, everything goes down, right? So Bitcoin is my main indicator to start showing me the drop first, because here's the thing. As soon as Bitcoin started dropping when I was watching it, Bitcoin started dropping, the altcoins actually rallied up against Bitcoin during that time. Just tiny little bits. And it was actually pumping up on a smaller time frame, like 5 minutes, as Bitcoin was dropping. But they didn't last very long. Before you know it, they started rolling over and started, getting in line, right? Taking orders from Bitcoin, and then it started following Bitcoin. And so that's why I'm saying, like, Bitcoin is your leader. Bitcoin's going first. That means that it's most likely gonna, drag these altcoins with a very high probability at some point, and it'll catch up. And I did make a video saying that the altcoins will catch up to Bitcoin, and they did. When Bitcoin pumped and made 126 high, I have a short on that. And these altcoins, they did follow up with Bitcoin's move. They did. They rallied up. I longed it, got my win, I got out. All right. The deal is that when it goes up with Bitcoin like that, you're supposed to be able to take your trade and walk away from it. And especially if you see that the altcoin didn't make another high and Bitcoin made a new high, the dominance is going to start spiking back up. You got this already because the rotation of the money is just going to start rotating back to Bitcoin. It's really that simple. If it starts to rotate back, I'll make another video on that, on the dominance too, at another time. But this right now, this is the government shutdown that's starting to show. Okay, so I'm going to try to stick with this. I know I jump all over the place, but the entire point that I want to show here is this government shutdown. And if we are looking for something similar, I want to target these downside. And when I'm targeting these downside, I'm talking about going back to these crosses here. I'm looking at this level of 39,000 to be a level that could potentially come back to retest. And if not, at least flip the previous high of this 333, which is at 49,000. Happened once already in August 5th, 2024. I think this is on a 3-day time frame. No, it's on a daily time frame. Happened once already. The divergences played out like this. But these, you can expect these levels to be levels of where it's going to have some sort of a bounce. And this level right here, I guarantee this level is going to be some form of support that you're going to find if it does roll over. Something like this, to where if it does do some sort of rounded Adam and Eve like this, like that, where it just starts fading, okay? Okay, like some sort of cup and handle like that. Typical ones I do see is like that, okay, to where it just starts doing this. And it could last all the way until, this could last all the way until like November. I'm saying November, just to come back below this and test this, just to get a bounce. If you get a bounce here and you get the head and shoulders formation here, this is, for pattern traders, you get what I'm saying. Okay, and if you just understand how volume works to even make these head and shoulders and why they even exist in the first place, why they show up on charts, then yeah, you get what I'm saying. Okay, if this holds, then you can expect a repeat of this pattern, and the trend will be easily expected to just go higher. Okay, it's a repeating pattern. Okay, so I'm thinking that right here is a repeating of this pattern, and this could be, this is an area where it's going to make a decision, where you're going to either see it reverse and completely do the opposite of what you're supposed to do and actually have a bubble pop before you retrace and continue one more time even higher as a bigger divergence, or you're going to see this thing do exactly what we see here, to where it just holds previous levels of support and resistance the same way, to where it forms like it goes down and it forms something similar like this, to where you have that bar formation, and it just holds above while this moving average just goes sideways. And if it holds there like that, you will pop. It will do a SFP before it runs though, which will come back to catch at the 666. All right, or go below it. And if it does, it will tap. So the 666 could be like this. This is why I say this area is really important. You're not going to look for the exact low. You are looking for the trend of the moving average. All right. You want to see this either continue up like that or it's going to sideways. So I wouldn't expect that much from Q4 if this government shutdown is in play. Get what I'm saying? You can trade the range of the government shutdown, like I'm saying. Here, zoom in on this. Let's zoom in on it so we can look at the range for Bitcoin. Bitcoin's outside the range at this point. Actually, the range is like right here. The range is actually to the low. So we have for Bitcoin, we have a 16, 17% range. Back in 2018 there, that was a 20%, 19 to 20% range. Okay, so we're pretty close to it, man. Just a little bit further to the 333 moving average here will probably take us about 19, 20%. Let's measure it. Okay, look at that. 19. That's about 1911. So I'm saying it's very similar to it. I'm not saying it's exactly, I'm not going to go into any sort of rabbit hole shit. I'm just saying that this is exactly the range that I'm looking at. Okay, that's quite possible for it to come back to test this. If it tests a 333 daily moving average, you might get a head and shoulders formation though that can roll you over. Okay, that can roll you over. Might have the same outcome as this, similar as in this head and shoulders right here. That will have some sort of a triple or double bottom, um, um, like price action over here. That can be similar to it. So what does that look like here? Similar to that same thing, okay? To where we would see something like of the same kind of nature to where it could hold this entire range here like this. And if it does hold this entire range, this is what you want to see to get a SFP, not all the way to the 666, but at least about halfway of it. So something about this halfway range would look like, it would look like this. Let's go about this high to this high. It would be right here around this area, 91, 92, 93K. That's a lot of word on the streets is talking about those levels. It's not just me. It's not just me. It's also an area of confluence of this profile right here. Okay. I need the box. Give me a sec. Right here of this entire profile. Oh, I'll go like this. So in the middle, okay, in the middle of this profile, this middle center line is exactly where you want to look for this to come back and claim and find support. If it does, that's good. Now let's go and check the Fibonacci level, all right? So if you're a Fib type of person, you'll get it, okay? But if you haven't tried these measuring off of these averages yet, you're in for a big surprise. And if you don't like it, that's fine, but it works for me. Okay, I'm going off of this to that high. I'm talking about a level that can come down to 47K. That if it does have a massive flash crash that typically you see that does something similar to this. Where's my lines? Okay, it's something. Okay, I'm not the best at using TradingView, all right? But all I'm saying is that typical flash crash would look something similar of this nature, right? That will go back to a certain support or resistance level. If it does come back, I want to see it here. If it goes further than that, I'm talking about something that goes past the 666. That is exactly where you want to get it at. I would look for this level, this 47,163. This level right here, to even to the retracement of the 49,000 level here, will be the level to where this would cause massive, I guess you could call it extreme greed. And I'll tell you this, every single time the market continued, it came after extreme greed. Everybody knows that. Wall Street cheat sheet, whatever you call that shit, you see it everywhere. And it's history that you're using as data here. We're not using made up, just made up data. Okay, this is history. So I'm looking at this 1.555 level to be my floor level here. I don't know how it's going to go there, at least not yet. But I do know that once these averages start converting, that just means that you are now in an area of distribution. This is when I would start looking for a distribution, a wider distribution pattern that could even be, okay, my chart's kind of getting messy, but I am going to fix this, okay? And here's the thing. The max extension that I went up to is this middle range that I'm looking at. If we do hang above the middle range like we did here, previously here, then this is the actual area that this is what I was looking at when we hit the max extension for what I measured on my chart, okay, is that I measured it from this point to the breakout, okay, of the bullish engulfing candle. So it came out from here. This was my profile, okay? This is how I knew this was the area that was high. When it came into the profile here, into this profile here, it was already at the point where it was already hitting critical mass, that I like to call it, to where it's hitting these areas here. And there was already divergences. So do you need to know any of this? You just got to trust your divergences. All right? That's all I got to say. And the biggest part is this: we don't, the indicators don't make the mistakes. We do. Okay. After 7 years, my biggest mistakes that cost me the most, and that was most of the 7 years of just giving shit back, is from not listening to the rules of the indicators. Listen to it, and you'll start winning because the algos and the reactions that you're seeing in these price action, they're the house. They're making the calls, not you, not your narrative, not what you heard. You know, follow these. I'm not making these up off of what I believe it is as a bias. I'm making these off of volume, from the candles, from the averages, from what's happened. Money comes in, money comes out, goes into the pot, aka the market. You take a little bit, you walk away. You take what you deserve, depending on how much you committed to the market. Okay? And you walk away. This is called farming the market. It's not trading, it's farming it. It's a different method to taking what it is that you put in out with what you've, gotten in terms of ROI from it based on your commitment, right? Here's my profile range. Yeah, I won't go over that much stuff on it, but I'll tell you exactly what you need to know for this video. My profile range, you'll get all this profile stuff too in the other videos. Just look at it. And it's this profile here, as soon as the moving average enters it, here, I'm saying, keep your eye on this moving average and look vertically where the price action is at. Look how far away it is from this 666. Look how it's starting to distribute as soon as it enters this range. The purple box is my range. The moment you enter this range, profits are being taken, assets are being given to who's buying the highs. Look at it go. Just look at it go. As soon as you hit the middle of the range now, which is support of this area, now it's resistance up above. Is that just happening because I want it to look like that? It's actually happening. So stop making up a narrative and start following the average. This is exactly what I mean. So you let this average climb back up, and it started to even react the same way. One, two, three touches. One, two, three touches. Why? Same amount of algorithm volume that's coming in and touching this range profile is reacting the same way as the average comes up. It starts to distribute in the same fashion. Okay? I'm not saying this to make it up. I'm saying it because the data is showing us right here in real time in the charts. Is it happening? This is on the daily, but I did this in the 1 minute time frames. The same thing. It happens the same way. It's just faster. So you have to be fast. You have to be good. I wouldn't recommend doing this in 1 minute time frame unless you know it like I do. Okay, watch the videos on there. You'll see it all, and I promise you'll get it. But you have to respect the rules and trust your strategy, and you'll start becoming more and more profitable. That's the only way you can break the loop of giving shit back. Okay, I've given enough back. It's now time to keep it. Okay, for me at least. And if you want to stop giving stuff back and you want to start keeping it, be consistent. Not in winning, be consistent with your strategy. And it's nothing more consistent than a dynamic indicator that moves with the charts, that you can put it on anywhere, and it's free. It's so free that's already on there. Am I using RSI? Absolutely not. Okay, I have the RSI, I have the stochastics, I have MACD, whatever you want to call it. The only one I'm really focused on is the 666 and the 333. Majority of the time is 666. 333 is only there to make noise. All right, but this right here, this Big Daddy. All right, pay attention to this guy. Watch this. As soon as this goes, let me show you another profile. This is the profile in 2024. Okay, if I knew how to use this profile in 2024, it would have been way more consistent. Even if I knew it back in 2024, this is the thing. Even if I knew it back in 2024, would I still have followed and listened to the strategy? There was a good chance I would not. All right, because that's still super hard-headed. You got to learn, and at this point, it's burned me enough. Okay, so I'm trying to tell you that This is even why my presence is even on the internet at this point. All right, it's because it makes sense now. All right, and so here we are. Your profile breakout. Your first breakout is obviously going to be the what do you call it? The bullish engulfing candle. All right. So you got this level here, which is your midway point. All right, and this is why I came back to this level. So I'm gonna draw my profile to here, and my top for this profile is going to be right here, to where I'm going to be seeing this come into the. Look, I got to get rid of this fib, okay, so we can see it better. And I'm gonna end it after this because I can't make the video so long. It's already getting into the extended area. And if you like this strategy, if you like the way I'm going over this, you gotta subscribe. Otherwise, look, I could just close this down and I don't need to share any of this. All right, I'm okay with the way things are. But if you really want to know this and you really want to stop giving money back, or even even be able to or I'm not gonna calibrate your your current style using this even for confirmations, if you like this, subscribe. All right, so that we could stay in touch. So here we are, profile breaking out, and this goes up to the area of, so the 666 comes into this breakout here. Okay, and now that when 666 comes into this breakout of this bullish engulfing candle, that's, look, bullish engulfing candle is just showing you the amount of money that's coming in, right? And of course, when it comes into that range, it mimics the candles and it starts to go into a higher area. So I'm going to say that this level right here, when it first broke out, first bullish engulfing candle right here is my level. So I'm going to say that this level, why am I, okay, I'll go over what I'm looking at here. So this level right here that I'm looking at is the high. So I'm looking at this level right here being the actual area where my profit taking would be right here. My profit taking would be right here. As you can see, profit taking happened here. A big ass red rejection right here. Okay? What this means is this. I'll put it down really quick. High of distribution. Some people can just call it resistance, but that's not clear enough. This is the area of the highest point where you want to sell, aka start distributing it onto people who are buying it. This is when buyers are like all over the place saying, buy, buy, Bitcoin's going to a million right here. Look at this. The confluence of it just selling, 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 selling when it comes to these levels. This is the level where you get most of the buyers. Look at the rejection here. Okay, where is your middle of the range? Exactly at these levels here. Here, actually, it could be. It's actually right here. So like right here is actually a bit too high. So I'm going to move this down. The reason why I had it, because I did measure the. Let's see if I measured it right. Yeah, it is right there. It is the 666 right here when it broke out. But the bigger engulfing candle is actually located right here. So it is right there actually. Oh, okay. I guess I could go one more level lower too, like this, if you want. But I'm gonna say it's right here because I did measure it up to that point. It does make sense about this area where we're being volume spike right here. Okay, where the inflow came right there. So I got that 666 measured up to that point where it started mimicking it. And right when you started getting inflow down here, you started getting the reversal up above. This is why when I say that the the uh, the point of the video is the U.S. government shutdown. When you had that bottom down there at the U.S. government in 2018, that was a reversal point. And 2022 there was an area of a pivot or divergence, like the continuation, fake to the downside and continue. It faked to 20 or to 15K, and then it continued. That's a massive ass move back up. All right, to break into a new high. If you know anything about the Dragon's Eye, I'm saying that those all when those retrace, they retrace all the way back to where they started. And I'm saying there's a gap at 20K. If you haven't figured that out yet, there's a CME gap at 20,000. Does that mean we're going to go back down there? Don't be surprised if we do. I'm just saying that. Don't be surprised if we do. But if we don't, and I hope we don't, if we do end up down there again, I would say you better buy it. All right, you better buy it because that's your double bottom. And you know, there's going to be huge words on the street that it's not going back up ever again. Why? Because when the dot com bubble popped, it took forever to get back up there for the tech. All right. So I'm just saying, but once Amazon did at the tech bubble, because Amazon does look similar to, um, if you want to look at how tech bubble blew up, look at Amazon. But once that recovered, it went into heaven, right? So I'm just saying that watch out. The biggest correction, if you want to see $1 million Bitcoin, you want to see this incorrect. But the correction is going to fall to that point. And okay, let me finish this off. See, I keep going off. So you can tell I'm not good at this because I haven't been on videos like at all before. But to go over this information the way that I do, I got to consolidate it. All right, because it is a lot of stuff, and you get in this for free. So if you want to see the deeper stuff, imagine what I got for you. To know where the exact tops are and bottoms are. That's you know more for like my what do you call it, my VIPs. All right. So this cross to go to the upside here, breaking into this ended up to be the areas of these highs. Now we're getting into this profile for the high. I'm saying that when these come back to the profiles, and once this breaks out of the profile, like this, once this breaks out of the profile, it goes into the next profile above, and it continues. But here's the thing about this corrections. Like Bitcoin gets to into these middle of the profile, they start to correct. Bitcoin's at the middle of the profile now. You're starting to see what? A correction. Here, it's starting to show you. It showed you a really good commitment candle already. This is what you call a bearish engulfing candle. It doesn't get more simpler than that. If you think this is going to continue up and you think this is a fake to the downside only, I'm going to say it right now. I'll challenge you on that. Good luck. Good luck trying to long it. Good luck trying to long this. You might get a little bit of wins here and there, but look how long this lasted before it rolled over. All right? Watch. This came up. It started it started correcting already on the way down. As soon as this got to the profile, let me get rid of this one. As soon as this got to the middle of the profile, right here, it started correcting already. So what I mean is the profile is, you can kind of say that this profile could be a little bit lower to kind of line up with the highs here. Okay, so I'll lower it a little bit more. You don't have to do it by lowering. I'm just doing this for the sake of the video. All right, and I'm not making this up. This is working the way it is, and I'm going to continue to do it the same way I've always done it. It's really that easy. So here we go. Now it broke through the profile range. What does that mean? It means that it's going to start mimicking price action that is above this profile, okay, above this middle line. It's going to start mimicking this, and watch. Now it starts mimicking that by chopping its way around like it always does, and it starts rolling up like this, and it starts rolling down the same way, okay? Except now it's just mirroring it, okay? And as soon as you break out of it, guess what happens? We're getting closer. There's your bottom, and guess what? There's your middle of this area to where it's starting to reverse already to the it's starting to do a reversal move already. Okay, like right here. It's entered this middle area right here. I'll just draw it out. Starting to enter this middle area right here. Okay, here. So watch this come down through. Even when it hits this middle of this profile, of this tiny little, of this, like this micro profile inside of this profile has a middle area too, to where this come up, and it started dumping already at the point where they started getting there. Why is it so right? Why is it so right? And I'll tell you, because I've lost way too much by when I don't listen to it. All right, and every single time I learned right away. If you don't want to pay the tuition of having to learn, then you follow exactly what I'm telling you here with the 666 and watch the video, subscribe and get it, get the alpha down, learn how to do it. Right? I'll teach you if you really want. Just ask and watch it climb back up, and then watching this mimic its price action to the upside now, continuation of it. All right, but here's the thing: if you're gonna see continuation breakout, look what happens when it starts mimicking what's to the left in this profile right here. This one, when it starts mimicking it. Why am I telling you this? Because it does do this. right here. You got one, two, three. You got one, two, three. Okay, it's not mimicking it completely, but it is for sure reacting to the price action previously based on inflow. If you're curious always about volume, and if you believe, if you're a volume kind of person and you like to understand volume's reacting, understand volume is reacting to this moving average. All right, do as you will with this, but if you want to really gauge in on it, contact me or just watch those videos. Whatever you don't understand, ask it in the comments. Okay, I'll answer whatever that comes up. If you really want to know more, we can dive deeper. Okay, if you want to see more live, then I'll start to do more lives. But you have to tell me if you want lives, because I'm not going to sit there and do lives, nonstop if it's not going to teach anybody anything. Okay, because it takes an extreme amount of focus to start doing this on a 1 minute time frame, and at the same time try to explain it. Okay, so you'll see what I mean if you go watch the live video. I did it for 8 hours, quiet half of the time because of the fact that I was so focused on 1 minute time frame. I was constantly doing the stuff. I'm not even going to talk about 1 second. Like, good luck with that. All right. So I'm saying this could retrace back up, but it's going to dance around this entire range. All right. And this is a big range, 17, but I think it's going to try to at least try to hit the 19% drop first before it builds some sort of a range. And pay attention to this. Okay. This 333 could enter this range. What do you think is going to happen when this 333 enters this range? Let's check it out. All we got to do is back test a tiny little bit like this. Here's your range. That's pretty similar to that one. All right. What did it do when it entered the range? It came up and it reacted in the same way of distribution. All right. Because this was above the profile high, which is an area of high of the distribution. And you entered that range and it started distributing and then it dumped. Okay. And then now you're dumping harder. Okay. So I'm just saying that no matter what, of course it went up and made a new high, but that's technically what you do when you are. And I'm not look, I'm not trying to end this by saying it's completely going to start the beginning of the bear market. I didn't say that. All right. This is a daily time frame. Bear market for me, if I'm looking for the exact high of this to actually kick in, I think that this actually has a little bit more. We got to get rid of this profile. Oops. It's not really so much of what I think, it's what's happening here. All right? It is never going to be about what I think. Right here. I'm going to go off of this profile range right here. To where I'm just going to go off of real quick. No need to go technical into it. Look, I can just draw the range like this and it still reacts the same similar way to these whenever it touches. It doesn't need to be exactly like my ranges. You're building the range based on where you took your profit and where the engulfing candle started. Okay? It doesn't need to be exact. You're not going to get it exact. You're going to get the average of it. All right? That's important, but you at least get above average moves. And you at least get the full extension of the move to know where the high of the profile is going to be. Okay? I'm doing this off of just squares and freaking lines. Okay, I'm nothing special when it comes down to this. Just squares and lines. I just understand how the movement looks like. All right. So here's the deal. This thing comes up into the top of the profile, bottom of the profile. Now that we're inside the range, it's starting to distribute harder above this range. We know that this is the profile high. If it's a profile high, once this gets into the center of this middle of this range, okay, we'll draw the profile within the profile like that. Once we start entering this area, this is probably going to see where you're going to see the next lower high. All right. And if this continues at a pace, I'm not sure how much this is climbing per day, but it's not much. So I would assume that if this was to drag out, let's just do a tiny little, you know, line that's going to continue to follow the same kind of trajectory, right? Just to get a date on the measurement, November 7th. There goes October. All of your October is going to be distributed into. This is why I'm saying, so you're going to long, look for lower highs. But if everybody is longing and they're looking for lower highs and the whole market is acting more of a short-term trader now, in short-term mindset, and there's more short-term participants, this is what happens when you get a short-term market participants involved. Let me get rid of these lines. And then this is where I'll leave it at you for you to decide for yourself. Okay, I'll leave this line right here to be the line where it's gonna meet and to build more distribution. Okay, so I'll do this as just for a line so that we can know. Okay, so I get rid of that box so we can see it better. I'll get rid of this too. We don't need this right now. And this, because we know that it started October 10th, no, October 1st, as the government shutdown. I think you already see where this is going. This happened so many times before. And it's clear already at this point. We'll turn this into a white line. And when you do this to it, and we make this line even bigger so that we can see it, what does this look like to you? I'll make this line a different line because that line's not being nice. Okay, so I'll go, it's like this. What does this look like to you? To me, that is a descending triangle. All right. Look, this is speculating at its best. All right. Doesn't mean I'm going to be right. It doesn't mean I'm going to be wrong. I don't care what it means. I've done plenty of these speculative moves. Some of them right, some of them wrong, but majority of the time they're right. This is what I'm looking at. It will find its way back to this average, and it does at some point, maybe like this, okay, by November. What does that mean? Bearish pattern of a head and shoulders formation that could continue, and it could, but before it does that, this is what Bitcoin, like, I mean, not Bitcoin, but basically most assets like to do. It goes down to this point. It doesn't move that like that. That goes to the upside, reclaims this range. Let me get it down here. Reclaims this range before, and it might even do a lower move first, right? Like this. I've seen it do this before, where it does that double bottom formation or something like this. SFP, and then come up for a high, only for this to swing lower. Okay, this is the technical behavior that I see that happens. Why am I saying that? It's because I've seen it happen so many times because you want to see this thing do this. You want to see it do that. If you want to see this go up, it needs to go lower. I'm just going off of what I know through my history of seeing these averages, and because I never listened to it. You learn the most through the pain. And this is why I'm saying that. It's the same repeating pattern. And it's always some form of a N formation to continue. Rising, retracing, down to the wherever level, and continuation of the move. It's a technical move. All right? Fundamentally, too. So if there's going to be a bigger move to $1,000,000 per Bitcoin, then yeah, it needs to continue with this thing. But there's a cycle to this, which means you will see altcoins move, you will see money rotation do the thing what it's supposed to do. And here's the deal. Coming back to this level to claim it, to fake it, to spoof the market, to only to continue lower, would be the idea for this thing to play out just the same way it did, but this time it's the opposite. Why am I saying that it's going to come back up into this profile? Because it's the same exact level at C19 came back up to fake it out and fuck everything up for the bears to go this way. If this time Bitcoin's going to 1,000,000, who's going to get fucked up? The bulls. So I'm saying, where are we going to go with this? But Bitcoin's not going to go to zero. Bitcoin's going to go back to where? Scene of the crime. These are the scene of the crime. You see the levels? I'm giving these away. Anybody can come up with these numbers, but don't be shocked if they're correct, because I know my numbers and I know how good I am when it comes down to hitting certain targets. So I'm doing this already for free, and look at this. So here's the thing: backtest it however you want. Give me what you think about it in the comments, and let's connect. I want to meet some other people out there with similar strategies or even better strategies. All right. So descending triangle is what I'm looking for this continuation of this move. Descending triangles, they don't end up to the upside that much. Okay. Not the probabilities of it is a reversal to the downside. And I'm looking at the first level to have a reaction is this 75. So here, I'll put it down, take a screenshot, save it, whatever. 74 to 75K. All right. Is the level. First level. Um, Second level here is the level of 49,000. Third level is obviously there's the supports. Okay. Obviously they're the supports, but if they already been tapped into, like this profile has already been tapped into by this, then you have a chance that when it does come here, all it's gonna do is range here for some time, like this, before they just roll over. Okay, it's a typical way of doing it. Where's my okay? So it'll do something like this. Technically, I was already doing it. Look, when it gets to these profile areas, what these candles like to do, they like to rip right through these trading ranges. They do. They really like to rip through trading ranges. So wherever you see trading ranges like this, they just like to rip through it. And there's so much here at this point, to the point where this 20,000 CME gap down below is actually an area to where you might want to pay attention. Really pay attention. And I'm telling you that there's been a lot of times that the price action does come back to the scene of the crime where the cross does happen. And then whenever it gets down there, it does one of them. No, it's notorious for this, doing one of those. Let's go. We're recovering back up, only to meet the fake out again above whatever the moving average is going to be. Let's say it's above there at this point, right? Getting back inside this profile. Let's just say that, only to go one more time to the low and grab 20,000. See me gap as a SFP, okay? And liquidating everybody who went long at these areas here and never took their profits. Does that sound familiar? It does to me. Whoever's been around for a long time that didn't take their profits and then they get liquidated in the end, it sounds familiar. To me, it does. I know that all too well, and I know a lot of you guys know all too well. Whoever's been trading, leverage or for some time now. So pay attention. It doesn't go up forever, right? It doesn't go up forever. It does retrace, and especially now that times are a bit different. You don't see a lot of double-digit green days like we used to in spot before 2020. Okay, you don't see that no more. It's rare to see double-digit green days on like the traditional tokens. Maybe some of the even some of the newer ones. Maybe I haven't seen a lot of the newer altcoins that actually have double-digit green days, but they don't last as long or even as efficient as back in 2020. Like I was just looking at Celestia and like even Aave. Like a lot of those guys did really, really well previous, but you don't see those guys pull double-digit green days anymore. More consistently, you see double-digit red. This is why I'm telling you, when you're above 666, distribution. What do we have today? We had a massive double-digit red day. I saw a lot of negative 30%, negative 40, negative 25, negative 50. Terrible. All right. So I'm saying stick to this and understand when distribution is showing up, it means you should be taking your profits. Not all of it. Come on. You could build your way down. If you're already seasoned on how to trail your stop losses, learn how to do it. If you don't, you already got a way to build your stop losses. Start building it. When you're above 666, it's already giving you the green light to start building your stop losses. Because if you don't, it'll come for you and it'll take everything back. All right. This is when you can spot these divergences that I'm telling you at the 333 here and they continue up. These are like what I call, if you watch my other videos, these are what I call the dragon's eye. Dragons hoard gold. This is where you make the most. All right. This is where I make the most. My percentages in these are the largest. These are the biggest returns I got. Okay. It don't matter about my returns. It shouldn't matter what my returns are even at. I'm more concerned about what you can get for yourself. All right. Because that's all I'm focused on myself too. It's not important. But you know what? If I can probably help somebody, make a difference in their trading, I know how it feels. All right. And so that's why I'm saying subscribe, post it up, talk. Say something in the comments. Don't lurk. All right. I lurked a long time too, but at least I commented here and there. Okay. So lurk, comment, fine. I don't care. Just let's make this work. All right. So if you like it, like the video. Okay. I just want to be somewhere because I know that I'm not taking anything with me when I'm dead, but I at least want to leave something here for somebody to at least know me by. All right, that's all I really, really, really care about. So if you like it, share it, do whatever you like, and I'll continue with the next video. I want to continue with the daily views on this because we are hitting that time. Q4 is one of the best times that I do want to start, be more active here and putting more live streams. So if I go live on these, I want to cover as much as possible, even show you some entry positions and some exits. Might be fast, in and out, might be 1 hour time frame, might be 4 hour, depending what it is, but it is going to be consistent, more and more consistent, and I'm looking for something like that. All right, thanks guys. Talk to you guys later. Stick around.